Well, what are you making of the kind of sentiment that's about with regards to the JSE? We're seeing pretty muted performance today, and largely on the back of the fact that the sentiment is we're very overvalued at this stage.
Afternoon, Alishia. Indeed, very interesting this morning. We saw the JSE opening up to the positive on the back of fairly bullish global markets, especially out of the United States, and mixed markets in Asia as well. We've subsequently seen all of those gains basically been given back. And again, not too surprising. We've seen the last 2 days investors really preferring to actually take some of that profit off the table, bearing in mind that we have had a significant run over the last 4 months. Not really surprising seeing investors taking some of that cash off the table.
It's specifically that resources segment that's seen a turnaround today. We've got the other four majors trading in the green. Resources, though, falling back despite a positive start.
Absolutely. I think what you're probably seeing, Alishia, is a little bit of sector rotation. Resources have really been your largest benefactor over the last 4 months, and they have really run significantly on the back of fairly strong global resource prices. Investors now really saying, are these prices sustainable? We're also seeing a slew of results coming out. And again, while the results really looking quite positive in some instances, a little less than the market had expected. And in other instances as well, a lot of the CEOs of these companies cautioning against the sustainability of such high resource prices.
Let's hone in into some of those results. I mean, Impala Platinum is one of them. And yes, the results in line with some of the other resource companies that have reported so far. But the flag to some investors is the fact, like you say, of the sustainability of the commodity price rise, where a lot of that demand is speculative right now.
Absolutely. I mean, Impala coming out with a very decent set of results. I mean, profit up 63%, a fairly strong cost focus in the business as well. Something which did stand out in the announcement that they put out earlier today was that they're seeing a lot of demand in the platinum market coming from financial demand in the form of ETFs and so on globally. Now, that kind of demand again raises a question mark over the sustainability of these commodity prices, especially on something like platinum. And if a global recovery does actually materialize, and if it is sustainable, arguably bodes very well for these stocks. However, in the absence of a sustainable global recovery, stocks like platinum arguably could come under significant pressure as that financial demand tends to dissipate and is a lot more volatile than the fundamental underlying industrial demand for the metal. Having
said all of that, Mohammed, we've got to recognize that Impala Platinum share price has run pretty hard so far to start off with.
Absolutely. I mean, Impala currently trading around 213, slightly flat to down on the day. That being said, Alishia, again, really does hinge on the sentiment around the metal. I mean, we had seen Impala trading at highs of around 360 rands some time ago. So if the recovery does materialize, if the outlook is very bullish on the metal, the potential is there for the share price to run. That being said, I'm not surprised to see investors taking some of the cash off the table in the resource sector.
When it comes to AngloGold Ashanti, it seems investors liking the news out of that front. But when we were chatting earlier, you raised some concern around the fact that this is a company looking to decrease its debt position. And the concern is why they're doing that as opposed to building capacity for the road ahead.
Yeah, I think, again, a very interesting set of results. Implat's coming out with about a 294 million US dollar profit before taking into account the effect of neutralizing their hedging book. So again, a very decent set of results. They have indicated in their results that going forward, a lot of their cash will be directed to paying down their debt. They're currently sitting on about around R1 billion worth of debt. What I find surprising is that, again, they've indicated a need to do away with the hedging book, indicating that they're quite bullish on the metals prices and want to sell that at market-related prices. If that is your view, one would assume that you'd be applying a lot more cash to building capacity in the market. So a little bit of a mixed picture coming out of that. Will be interesting to see how that plays out.
More than decent, it would seem. The Woolies numbers that we saw, that share price running ahead today, we're up 3.66% so far, and we're only halfway through. Your interpretation of the numbers that came through there?
A very, very strong set of results coming through from Woolies. I mean, turnover was up close to 10%, with profit up north of about 22%, if I stand corrected, and also a nice dividend coming through of about 50 cents. A very strong set of results on the back of very strong retail numbers. One must bear in mind the stock over the last 12 months currently trading up close to 20%. We're around 25 rands to 25 rand 44. The stock having traded at a high of about 29 rands not too long ago. I'm not that bullish on the consumer going out further than 12 months. That being said, over the next 12 months, the picture does appear quite clear. But again, the potential for interest rate increases, perhaps early next year, does not bode well for consumer balance sheets. And arguably, you could start seeing 12 months from now, the consumer coming under a little bit of pressure. So again, a stock trading at very high levels on the back of very, very strong results. The sustainability of those results really something to look at.
Mohammed, we've got to look on a continental basis though, because this is a company that's getting a little bit more aggressive in terms of its regional expansion. It's figured out that the model it's employed so far hasn't quite worked. It's now opting to, rather than going down that franchise route, going down the JV avenue instead. What are you making of that strategy?
Again, Alicia, that's really the interesting bit here, is that you're seeing a lot of the South African companies, arguably facing good, depending on the sector, good to mediocre kind of conditions in the South African market. A lot of them looking to the African continent for growth, but learning very quickly that the African continent is not a homogeneous entity. The way you operate in a variety of these economies tends to differ from economy to economy. Woolly seems to have learned that lesson, and really looking at the JV route in the various economies that they operate in, I would argue is a positive signal, indicating that they are aware that operationally a very different picture in each of these countries, and again looking for growth in markets where the potential is certainly there for high growth going forward.